Good morning, everyone. Welcome to Ainsley News Crypto Tuesday. Traditional market jitters hit crypto, but the technical data remains strong. The Bitcoin market traded slightly higher this week, opening at a low of 43,789 US and trading up to an intraday high of 48,730. Prices are forming a consolidation trading range after the volatile sell-off that started the previous week, clearing 4 billion in excess leverage in 1 hour. The Bitcoin market finds itself amidst a macroeconomic landscape punctuated by growing uncertainties in Chinese credit markets and downside price action for traditional equities over the week. Despite this backdrop, Bitcoin price action and on-chain investor responses appear relatively robust. As noted by Glassnode in their latest weekly report, exchange balances continue outflows. Whilst there is spending behaviour observable amongst the existing cohort of Bitcoin holders, it appears that there is even more demand for coins accumulated from exchange balances. Overall exchange balances have continued to decline this week, reaching a new multi-year low of 13% of circulating supply. This returns exchange balances to levels last seen in February 2018. Keep in mind that prices were trading between 6k and 10k at that time. The accumulation of coins after March 2020, with prices trading up from 3.5k or 3.8k, to over $64,000 in April, reflects the significant growth of capital inflows necessary to withdraw this relative coin volume. Supporting this observation is a deeply negative exchange net reading this week, with current BTC outflows occurring at a rate of negative 92k or negative 92,000 BTC per month. Similar to the exchange balance chart we've shown, if you check out our news online, you can check out those images. The market shifted paradigm after the March 2020 from a regime of net exchange inflow dominance to outflow dominance. For those of you who are just listening to BTC news for the first time, we kind of keep an eye on this stuff from Glassnode to see whether people are taking their coins away from exchanges and putting them onto cold wallets. So that's an outflow that's great for coin price. Or if people are loading into exchanges, we anticipate that they're looking to sell. What we can see from this data is the market participants who are selling at the moment are selling at a loss and selling to high conviction buyers who are then withdrawing from exchanges to cold wallets. Glassnode adds clarification to the modest realization of profits and small realization of losses, saying the following. In on-chain analysis, we often build models upon the concept of realized value for a coin. That is the price at which the UTXO, containing some volume of BTC, was created. Another way to consider this is the price at which a coin last moved, thus reflecting the on-chain cost basis for that coin. When a coin is spent at a later time, we can assess the difference between the original realized price and the current spent price to assess if the owner is realizing a profit or a loss. The aggregate value of all coins spent that day provides an estimate on the volume of capital flowing into the market, as every seller is by definition matched with a buyer. Since late July, the market has consistently realized net profits on the order of around $1 billion per day, as prices rallied from $31,000 to over $52,000 US. This suggests a relatively meaningful bid has supported the market on the way up. Despite the incredible strength that is found in technical data for BTC, the fundamental markets have shown signs of weakness, bringing down risky assets with it. This sell-off is the continuation of a well-established pattern where traders cash in their riskier assets to cover margin calls or sit on the sidelines until markets calm down and they feel more comfortable going back into riskier positions. Past data shows that September dips paved the way for larger bull runs, particularly those seen after a halving year. Bitcoin underwent its third mining reward halving in May last year. The first and the second halvings took place in 2012 and 2016. BTC, from a technical point of view, certainly wants to make another push up towards the all-time highs, but is fighting against headwinds in the traditional markets. What this could provide is a textbook buy-the-dip situation for investors who are attempting to begin building their crypto portfolio or add to their existing portfolio as well. I think the next week or two is going to be very interesting. And as always, everyone's keeping their eyes on September in both the crypto and in the equities markets. And that's news for today, everyone. Thanks for joining. Remember, ainsleywealth.com.au if you're looking to purchase any of our range of cryptocurrencies, and in a secure offline environment. Remember, that's a really important thing. Don't keep your stuff in a hot wallet or on exchanges if you can. Always keep it cold. If you're after the physical stuff, gold, silver and platinum, jump over to ainsleyBullion.com.au. And lastly, check out goldsilverstandard.com. That's a cryptocurrency built by Ainsley and backed by gold, real gold, stored at Reserve Vault in Brisbane, and also real silver. We've got 2 tokens there, one's gold and one's silver, and both are backed and stored securely. We'll catch you tomorrow, everyone. Enjoy Tuesday, and we'll speak soon.